All right, everybody, welcome to another episode of the Coast to Coast Traders podcast. And, well, I'm a little bit bummed because Joe's gone. But, he'll be back next week. I mean, it's just Happy Father's Day, right? So, Happy Father's Day to all you dads out there. Hope you guys are having a really great day and some quality time with your family. And so, while Joe's gone, I got a list of things that I'm going to be talking about and maybe a little bit of scripting, but not that I'm necessarily going to follow that to the letter. It's just nice for me to have a bullet point of things to be looking at just because without Joe, we have a really good back and forth and things flow pretty naturally between us when we're unscripted and just talking. But, while I'm flying solo, hopefully this will keep me on, moving along at a decent pace here. So with that said, let's get into it. And I just want to talk about a few things here. Let me actually open up Chrome. Oops, Chrome. All right, perfect. So the first thing I wanted to mention was just a post from Patrick Wieland. Love him or hate him, but he made an interesting post here. He's signing a really big deal with a new prop firm. Well, I don't know about a new, but a new one that he's been negotiating with. So he's been pretty big with not Topstep, but Apex as far as affiliates go. And he's been working with Tradeify quite a bit recently, but it's undisclosed. Follow him for an update to see what that's going to be. Could be top take profit trader. But anyway, he's saying, I told the new firm I signed the biggest deal ever in the history of prop firm deals with that the first 10 traders who get a payout using the code PW, that he's going to match that payout amount as well as a BDH bonus. So 5,000 per person for the first 10 traders, and maybe he'll fly some of them out to the BDH to trade with him, during one of his live recordings and stuff. So that's pretty cool. If you guys are interested in that, go, check him out and stuff. But moving right along here, we had some volatility in the market, this week as a result of CPI and unemployment claims. And specifically on Wednesday, which was CPI, if I remember correctly. Yeah, CPI. The inflation report came in a little bit better than expected. And we had a pretty good market reaction to that. Actually, this is the next day. So here we are, CPI. Pretty good market reaction, but the response wasn't sustained throughout the day, and we pretty much ended up selling off. So I'm not really quite sure what the result of that was. There could have been some other news that I wasn't completely following as a result of that. But you can see the next day we had unemployment claims, and the market was responding pretty bullishly to the unemployment claims, which came in flat on the previous reporting. And they were expecting them to be a little bit softer, but ended up looking quite good. But unfortunately, that evening, Thursday night, Iran, actually, Israel attacked Iran. But before I get ahead of that, actually, I wanted to talk about some interest stuff. We had the CPI inflation and the unemployment is a common reason when those are positive. It's a common reason that we would expect the Fed to raise or to lower interest rates. And Powell is definitely not budging right now. And we don't know when the next rate cut's going to come, if it's going to happen. But President Trump is really pushing him for interest rate cut. Naturally, the government wants to reduce the amount of interest payments that they're making on the incredible debt that we have as a nation. But specifically, he is wanting Powell to lower by a full point. And I think that's pretty unlikely, but we would have a pretty epic squeeze, I think, if that was the case, right? And speaking of interest, Joe and I talked about the real estate market softening, maybe crashing a little bit, some episodes past. But one thing that we haven't talked about was metals, and specifically, oops, hang on a second here, guys. Let me reload this. Here we are. Specifically, we're looking at silver here, making a huge breakout on the weekly. We had a base here for quite a while, but with the money printing machine going, naturally we're going to see commodities like silver and gold making new highs. So we have an all-time high here on silver breaking out. And then we have gold looking like it's going to make a similar breakout soon as well. And one of the reasons specifically I wanted to talk about gold is because I have been experimenting with automated trading, specifically around gold itself. And I wanted to share a couple of trades that I took. One of them was taken by me, and the other one was the automated trade. So, oops, oh shoot, that's the wrong screen here, guys. Sorry about that. Okay, so you can see, guys, I took a automated trade here with the strategy. Oh, well, I didn't take it, but the script fired. So put me in long 5 contracts here at 448 with a 2-point stop loss and a 4-point target profit. Now, this is a strategy based on the 10-minute and 2. So when we're above VWAP and the 10-minute candle flips bullish, then it's looking for a 2-minute EMA tap for an entry. And you can actually see that I didn't quite wait for the 2-minute EMA tap. In fact, I was a smidge early. I kind of thought that I didn't want this 2-minute CBC itself to flip. So my entry was based on the open of that candle there. But, you know, some key differences that I find myself, or I believe myself to be have a decent understanding of market structure. And so, you know, my entry here with my stop loss specifically being 2.3 points, my stop loss was based on where I thought the price action would be respected. And my profit target was basically to this price level. You know, I had seen this push down here, and under here we were basing for some support previously. So I kind of wanted to target this. I thought this is a pretty strong move, like a fake out breakout under here, pushing back up. I thought we'd, you know, reclaim to somewhere around here. But of course, I want to be out before we approach there, because you never know when it's going to push back, right? So we'll see here on the next slide that the algo took profit right on the pivot break. Of course, that's just, you know, coincidence, because the algo has no clue really what the structure looks like. These bracket orders are purely just predefined. So just conveniently, they were, you know, 4 points was at basically the pivot break. But, you know, mine was a little bit higher. And you can see that I got pretty lucky with the top tick here before it started spilling off. So this was a little around 1:20, it looks like, Eastern time. And if we look at where that was here, aha. Yeah, so right around here is where that took profit. Let's look on the 5-minute chart really quick. Yeah, so right around here. And, you know, like I said, I was trying to find this where we would potentially find some resistance. And, you know, sometimes you get lucky with that top tick. But, you know, it's just interesting that the algorithm, you know, has absolutely no emotions or behaviors. It had a really fantastic entry, just technically. And mine, you know, I have some emotion behind it. I didn't want that CBC to flip, so that's why my entry didn't actually wait for the 2-minute tap. But, you know, if I had, I could have had much greater risk reward, or, you know, I would have had a similar target price just scaling at the pivot. Obviously less risk scaling at the pivot, because you never know that it's going to push higher. And so that's one of the big differences, you know, algo trading versus real trading, is because, you know, we have emotions. We're managing trades in ways that we see fit, trying to find areas of interest. And, you know, it's pretty interesting that we're finding these types of strategies out there. And I've seen this kind of stuff before in like advertising feeds on social media. I've seen some automated trading. But typically what I found with those, at least, you know, the few that I've seen, you know, I don't have a really big sample pool, but those have typically had negative risk to reward ratios, and they have you set the chart up with like Heikin-Ashi candles. So that's pretty foreign to me, but, you know, I thought this was interesting to share. So it's something that I'm going to be continuing to experiment with, and one of these days when this automated script is ready to go live, maybe we'll share that with you guys in the group and take another look at it. So let's see here. Moving on, we have I did mention it briefly. Let me just switch my chart here back to Thinkorswim. So yeah, we had Israel attack Iran Thursday evening, and that led to a really nasty sell-off in the market here. And interestingly enough, in pre-market here, we're doing quite the reversal. So my approach to the open on Friday morning was, I know we have a very strong move down. And if we're just drawing like a fib somewhere, like some people draw it on the ignition candle, some people draw it just on the very top of the pivot, whatever it may be. But I knew that we were already in the golden zone, which is between the 50 and the 61.8 fib. But what was important to me was that, we had a very strong 10-minute candle flip, and we're basing over this area in the pre-market. The London orb is, from basically here to here. So it's in a tight range, but we're above that. There's some wicks here, but we consolidated here and made that strong pushover. Yes, we're selling down, but we're popping off VWAP. Now again, VWAP we know isn't a hard and fast rule of like always take a trade on, but it's a scaling pivot, a scaling point in many instances. And what I wanted to see was a strong 5/10 minute candle close over this pivot, and that was my permission to go long, even though like on this larger time frame move we're bearish, but like on the shorter, for me, this is a very strong move. Unfortunately, I was just too slow to enter a bid here as this was coming back down, like on the 2-minute chart. Because it was meeting my criteria of a strong close higher. And actually, I'm usually trading on the 1-minute right off the open. So let's see here really quick. So yeah, I saw this push down and then it was popping, and I immediately set a bid, but based on how it popped, and I was already thinking right here prior to the open, this is like a 3-bar play setup. So when we got this, even in pre-market, I'm like, man, my rules recently preclude me to trade this close to the open. And I just hesitated to set the bid when it came down. I just wanted to see a wick and then hope that I can get like the next wick to like as a pullback, a second wick, and then go long. But it just ran away from me, unfortunately, right? So yeah, that pushed up, and I was waiting for an EMA pullback. In this situation, when it ran so far, I was waiting for the 2-minute. And I did get a nice long trade there, but the day ended up being pretty rough because we were pulling back in quite a large way. And one of the things that I thought was interesting is that, this was the University of Michigan consumer sentiment. And, we had the Israeli attack, but, we pretty much reclaimed the entire knife from that evening in real-time hours, right? And this is kind of the same thing that we had done on days before. So, we had CPI here, great reaction, but we sold off. And then we have the unemployment claims, basically, bringing us right back to where we were, at least, roughly midday. But, here we are on a new contract, and, we're pushing up. So, not quite sure what that's gonna hold for us, coming in the future. But we'll just have to keep an eye on things and see how that's going. And one of the reasons I wanted to circle back here actually to the Israel attack is that we should, or the Israel attack on Iran, is that we should be looking at the oil markets. So let me pull up that chart really quick. Oil here. I can't actually remember the last time I charted oil. So this is a pretty old drawing. I don't know where this came from. Probably somewhere. I don't even know when, man. Maybe earlier in the year. I'm not sure. But we have a pretty strong daily move. Incidentally, right off of that attack, and so we're pulling back right now. But this is just something to keep an eye on. If we are going to be seeing war in the Middle East, a lot of oil producing countries out there, of course. And if any of that production is impacted in any way, we're going to see, big, strong moves in the oil market. So that pretty much wraps up what I wanted to talk about with regards to the charts and stuff. And now I just wanted to just talk about some discipline and principles and success and stuff, and how that applies to trading. So first, actually, I'm going to start with values. Those are things that we identify as important and good. And so in trading, what are things that I might value? Of course, besides, simply making money. That's the obvious. We all want to make money in the market. So for me, that's going to be limit orders, following a plan, waiting for my setup. Basically, in my opinion, this is all patience-related stuff. And principles are the rules and standards that are derived from our values. So it's what we turn to when we have a hard choice to make, because it dictates how we should act in certain situations. If you don't have any principles and rules for trading, you're going to make random and inconsistent trades, and maybe wondering why you have such inconsistent results. Wild profit days, but of course, wild loss days too. So what are some principles that I might have? Big one is a daily loss limit, because it's going to prevent me from having huge blowups and tilting. Can't count the number of times, I'm sure Joe can attest to this, that I've shared with him, days that I've, hit my daily loss limit, but, kept trading and ended up, having really big blow up days and inevitably blowing up accounts, right? So without principles, we're forced to react to circumstances without considering what we're valuing and, how to make choices to get what we want. And what we want in trading, is money. So with that said, I wanted to just share a little post that Red Wine from the House of Stacks shared with me. Well, shared with the group. And this was on Instagram. So let's pull that up here really quick. It says, "You must choose one of two pains, the pain of discipline or the pain of regret. Discipline hurts in the moment. It demands focus, sacrifice, and consistency. It asks you to delay gratification, to stay locked in, to keep showing up when your feelings say otherwise. But the pain of discipline builds you. It shapes character, creates confidence, and opens doors. Regret? That pain lingers. It shows up when it's too late to fix it. When the opportunity passed, when you realized you chose comfort over growth, that pain eats at you because deep down you know you were capable. You just didn't commit." So I thought that was really cool, and it was just a convenient time for me to see that kind of post, because I'm reading about discipline and stuff right now, and some things that I'm looking into and wanted to share with you guys. And with that said, I appreciate you guys for joining me here. Like I said, we're just going to keep this pretty short without Joe. But again, happy Father's Day. Don't forget to share, like, and subscribe, and we'll catch you guys all in the next one. Thanks.